Hello, everyone. Thank you so much for joining us today for our webinar covering LatAm payment megatrends. My name is Ave Delgado. I am Digital Marketing Director for America's Market Intelligence and PCMI. I'm going to be serving as the moderator for today's event for PCMI, covering, of course, these payment megatrends. So before we get started, I want to give you a quick understanding of the format. Basically, we have the presentation that lasts from anywhere from 55 minutes or so. And after that, we have time for questions. You can ask questions at any point in time during the webinar. If you go to your user panel, you'll see an icon that says Q&A. If you click on that and bring it up, you'll be able to write in. A lot of you are Zoom veterans, so you know all about this stuff, but we're giving you that information just in case. And as you notice, we had a bit of a countdown before we started, which we usually do to give Zoom actually time to let people into the webinar. So it takes a little while for everyone to come in. So hopefully most, if not all of you, are actually now with us, and we're going to proceed from there. So as we look here, this is our legal notice. This is something that you can read at your leisure. We're not going to really be focused on it right now. It's just something that we always have to do. And so there's that. And this is our speaker list for today. I'm sure you're familiar with a lot of them, so we're not going to go into each individual breakdown. We're actually going to be meeting them as we go along with today's event. And since we have a lot to show, we want to keep everything moving along. So I'm going to turn the floor over to Lindsay Lear, the Managing Director of PCMI, to kick us off. Lindsay.
Thanks, Abel. Hi, everyone. Great to be with you today. My name is Lindsay Lear. I'm Managing Director of PCMI. Every year, for the past 5 years, I'd say, we have come out with our annual Megatrends, first starting in Latin America, then expanding to other regions of the world. And we've done it in a little bit of a different format each year. And this year is no exception. We've evolved our thinking around global megatrends in the industry. And our approach this year is actually thinking about what are 5 macro trends shaping payments today in 2026, and how are those same macro trends manifesting differently across 3 major regions: Latin America, the United States, and Asia Pacific. How are they manifesting, and at what level of maturity is each trend in each region? So I think this is going to be a really interesting and engaging way to approach these trends and understand global payments, and then how we need to adjust our strategies each region accordingly. So our mega trends globally: multi-rail world, the battle for micro transactions intensifies; AI becoming the gateway to commerce; cross-border is fragmenting with growing intra-regional flows; what we call the great acquiring unbundling, or the emergence of acceptance ecosystems; and then finally B2B payment modernization and strategization. I think we made up that word to depict a particular trend about converting B2B payments into actual business strategy. Okay, so before we dive into our actual megatrends for Latin America, if we go ahead, I'd like to give you all a framework to help organize your thought around these trends. Why is that? We are dedicated to research and insights, which are very important, very thought-provoking, very interesting, very engaging. However, research alone does not push companies forward, does not help you make decisions. So at PCMI, we not only deliver the research and the insights, but also strategic decision-making frameworks to help you obtain certain outcomes. And for companies to really succeed, you have to have clarity on 3 things: clarity on the outcomes that you're looking for, clarity on the options that are available to you, and clarity on how to achieve those goals, or what we might call strategic intentions. So go back one, Abel, if you don't mind. And we're going to look at, these are the 6 macro objectives that companies kind of look for in the payments industry. Any decision you make probably falls into one of these 6 camps, right? Do you want to own the user experience? If that's the case, you might be creating a product flywheel. Are you looking to own the rail? You might be looking to increase volume or share of wallet. Controlling the economics, you might be looking to protect margins, lower costs, or optimize performance. Is your goal to embed in growth ecosystems? If that's the case, your decision making is more around partnerships and distribution. Maybe you are actually seeking to enable high-value workflows and you're looking to add value beyond payments. Or finally, managing risk, whether that be fraud, operational, or regulatory risk. Every decision companies make in the industry are more or less anchored to one of these 6 fields. And if we abstract that a level further, now we can go ahead. We have divided these six outcomes into 3 major camps where which represent how PCMI has organized our service line. Grow. Number 2 is measure. And number 3 is protect. Each company in the industry has to grow, measure, or protect their business based on who they are, where they're operating, and what their ultimate objectives are. Okay, so to help you further organize your thinking here, if we go one step further, your actions are going to be dependent on what your strategic intention is. You might be trying to own something in the business, you might be trying to enable something in the business, or you may be trying to optimize something in the business. So, what we've done here is organize these 6 goals into grow, measure, protect, which also correspond to own, enable, and optimize. And this is how we help you through research, insights, and decision-making frameworks actually move powerfully through these trends, which create a lot of chaos, which create a lot of unknowns and a lot of uncertainty. So that's our ultimate goal in this session today. Okay, so let's go ahead and start off our discussion, starting with multi-rail world. This is, of course, very fascinating and fast-moving topic in payments in Latin America. And I'm going to invite Valentina, based in Medellin, Colombia, to walk us through this trend. Welcome, Vale.
Thank you, Lindsay. Please, Abel. So one takeaway: Latin America is no longer a single rate payment market; it's a structural multi-rate. Please go ahead. So if you see the next this slide, you can see that we are trying to track some multi-rate schemes. So, for example, SPay in Mexico is increasingly penetration, low value customer use case. If you go next to Colombia, Colombia is creating or replicating PIX model. So Breve has like memoried PIX playbook and scaling rapidly, positioning Colombia as, I think, the next major A2A growth market. If we go to the next one, Peru is we can say taking different design path because they're like more influenced from UPI or by UPI, emphasizing from the day one, emphasizing interoperability and ecosystem orchestration. So if we go to thank you, well, Brazil, of course, Brazil reminds the reference model. They're trying, some players like Newbound, they're trying to monetize PIX via credit, checkouts, and embedded usage. And if we go to Argentina, I think Argentina represents a platform-led alternative where Mercado Pago dominates through wallet-centric rails. So the question here is no longer where RTP will escape. The question here is who captures value in transfer-linked words, banks, wallet, or overall providers. So we go next. Thank you, Will. So as what I was saying, Breve or Colombia is the next like major A2A like market. So Colombia has moved from infrastructure rollout to mass adoption in record time. So Breve launched in October, and fast they get like 87% algorithm registration in early stages. So it seems really close to how PITS was adopted in early stages. So we are seeing like registration is strong. We can see like merchant are increasingly accepting, and the checkout integration will like go through all other stages, will be more mature, and we were seeing other models to monetize those transactions going to go through the next months or years. So Breve, the infrastructure of Breve is uh, going taking the same path that PIGS and Brazil normative take. So in this slide, I want to leave this question is who captures the value as usage depends. So if we go to the mix of Breve in the next slide, thank you. One takeaway here, registration alone doesn't create revenue. Transaction mix does. As with P's, the real inflection point is when P2M begins to escalate. So if we look by big weekly average over the past 2 months, P2M transactions have grown regularly 10% to 40% of total Breve transactions. On the value side, P2M has increasingly from 6% to 10% closely. So this trajectory is really important. It shows merchant adoption, particularly among SMEs, and we can say that this is really happened. So if we compare to PIX during its first year, purchases are around 10% of the total value. So the path is really similar to Breve. So Breve is following the same curve as I said. So economically, why this matter? This matter because P2M builds engagement. P2P builds engagement, but P2M builds monetization. So here is where this RTP is going to build the next flows. So I think Breve will, as I said, will construct about the same path as PIX did, especially now that the central bank and the government are trying to construct open finance regulation. If we go to the next one. So now we're talking about PIX. PIX demonstrate what maturity looks like. In its first year, purchases represent about 10% of transaction volume. Similar what Breve is now showing us. But by 2025, PIX purchase exceed 42% of total transaction count. And by October, P2M become the number one usage surprises P2P. So that's really that's very good. So that marks a fundamental transaction. PIX evolved from a transfer digitalization rail into a primary commerce infrastructure. So when RTP begins to compete directly with cards at the checkout, the lesson is clear. So for example, for Colombia, if you want to compare to Colombia, if Breve, for example, continues this trajectory, we should expect accelerating P2M penetration, merchant integration, and of course, emerge of a lot of monetization models. So one takeaway to finish this slide is success RTP system begins as transfer networks, but their strategic impact is when they become embedded in the commerce, physical commerce or online commerce. And the next one, thank you, El. If we look here, Brazil, we can distinguish between financial winners and strategic winners. The largest bank captured the most direct economic value, but PICs accelerate money movement, increase transaction frequency, improve retention, and especially among SMEs. But vintage captured the greatest strategic upside. So, for example, new bank secure account, pre account, and monetize PICs through credit. If we see other players like Mercado Pago, PagSeguro, who are trying to formalize SMEs economic ecosystem and monetize through merchant service and credit, we see like other path of this new ecosystem or centralizing in A2A. So in this RTP war, we can say we have two largest winner: economic winner, institution with large deposit bases, and a strategic winner, digital players who are trying to engage into credit and mostly credit. So if we compare this to Colombia, the large banks like Bancolombia, Da Vivienda, or Banco de Bogotá likely capture most of the direct revenue. But if we are talking about strategic values, digital first players like Nequi, DaviPlata, and Nubank are winning too. So unlike to Brazil, Colombia vintage landscape is less consolidated. So my guess is that the long-term strategic winner is still tight, like we need it's still to be determined. So the next slide, please. Oh. Zooming out, public RTP fundamental shift industry in this economy, in this new ecosystem. In a normal card-centric world, value is built around interchange. Issuers, networks, and acquirers wins but maximize transaction volume. So here, in this card-centric world, payment rails are really a strategic access. But when we go to a new world, when a public insert and neo-sphere RTP rail is introduced with full interoperability, the transactions becomes a commodity. So payments stop being so payments value migrates to balance sheet. In account-centric model, profitability is driven by deposit accumulation, lead margin, and net interest spread. So no interchange here, but other ways to monetize those rails. So the winners here becomes to be institutions that control, for example, at what we're seeing in Brazil, accounts and SMEs relationship. So that's why Brazilian banks embrace PICs despite interchange risks. And I think the same is a structural logic now applies to markets that are expanding RTP infrastructure like Colombia and next Peru. And here I want to close with one question. So for us, the question is not whether RTPs disrupt card, is how institutions repositions to win in account-to-account centric economic. So I'm going to pass the floor to Lindsay to close this trend.
Thanks, Vale. As we all know, this is probably the top trend, most fast-moving trend that all of us are watching. We've been watching for several years, and we continue to watch as it impacts other markets. And the real question I want us all to be thinking about is how can I be positioned to win as Breve scales and economics and profit pools shift? This is not only applicable to Colombia, it's applicable to other markets that are in earlier stages, but will most likely eventually follow a similar path. The answer to that question depends on what is my strategic intention? Am I trying to own deposits? Am I enabling multi-rail, or am I optimizing existing card volumes, margin, or operational complexity? We have, a series of potential actions here, and Brazil gives a great blueprint for how this might roll out in Colombia. And so if we take a look at what PCMI's role is in helping you navigate these shifts, we want to help you get clarity and power in these dynamics that really turn the industry on its head, whether if you're an issuer developing a strategy for account primacy or new rail monetization, if you're a merchant optimizing acceptance economics and how you set up your acquiring strategy. If you're a network, quantify potential displacement risk while designing multi-rail participation and value-added services. For regional players, how can we take these lessons and apply them to other markets before disruption happens? Okay, so this is a map to help you think about what is the most strategic question I need to be answering, what is my strategic intention, what are my options, and how can PCMI support? All right. So thank you, Bale. Let's move on to trend number 2, which is a very exciting one. I know many of you are probably really looking forward to this section. I'm going to invite Marina to walk us through this trend.
Perfect. Thank you, Lindsay. Hello, everyone. I'm Marina Gil. I've been working with PCMI for the last 6 years. Glad to have all of you here. Hopefully, this will be valuable for you. So let's get started. In the next slide is starting the section, this trend, right? So what about AI becoming the gateway to commerce? It's a very hot, a lot of buzz and noise topic, right? We know everyone has an eyes on this AI thing, but let us try to put that, what is really happening here in Latin America regarding the AI-enabled shopping. Right. And as you may notice, I'm talking about AI-enabled shopping, and I'm not mentioning agentic e-commerce for now, because this is the final move, right? It's a process until we get to the agentic commerce, because there is a landscape where everything is really fully programmable, fully automated, and autonomous. So until we get there, we have some phases that we've been seeing happening with the assistance of AI to the commerce. You're starting with the phase 1. Right, what we are calling the AI-assisted discovery. Here is where the consumers are using AI to look for products, to compare prices, to look for reviews, to really explore, but not really doing purchases here. It's like an exploratory and assisted discovery based on the AI, right? Then if you go to the phase 2, is on top of doing the exploratory research, you have the AI embedded checkout, right? And here what changes is like, the consumers can complete the purchase within the app, the AI interface, right? But every single payment has to be approved. It's not autonomous yet, right? And then when you go to the phase 3, the agentic commerce that we are hearing a lot about, that is where the AI monitors everything. So they monitor preferences, inventories, prices, the trigger. If you reach the transaction trigger, the transaction is completed within the parameters you established, and then budgeting and payment methods, everything is doing autonomous directly in the AI app, right? So this is the next, not the next, but the last phase, what we're hearing about agentic commerce, and that's why we want to set the page, the tone here. We have different stages, but not really happening yet. If you want to ask me, where is Latin America in these phases, I would attest you that Latin America is on phase 1, right? We are an AI-assisted discovery. Most of the markets are. If you could press here the evolution for the audience to see, the phase 3 is still to come, right? Abel, if you want to just show the timeline. Yes. So we have the industry here. Tomorrow, Lindsay will present US Megatrends. And then you can have more insights about the other phases, as US is a little bit more advanced. And then she's going to give more insights about the phase 2. But moving next, how do we know that Latin America is at phase 1, right? We have a lot of studies being conducted on this topic, right? And some data points that really supports this. So we know that 70% of the Latin Americans have used AI for shopping. This is from Visa survey, and it's much more than the 61% from US, right? But why are Latin Americans using AI? To get gift inspirations and to compare prices. Again, like exploratory research. Then we have that 83% of year-over-year growth in the e-commerce sites traffic via AI tools. So another huge increase. And we know that 30%, consumers are 30% more likely to really complete the transaction, like to purchase, if they use an AI in the purchase journey. So this all shows that AI-enabled shopping is happening, is coming to Latin America, but this highlights that is still we have AI being used to the exploratory phase, to research phase, also increasing the conversion rates, but it's still the place where the transaction happens haven't still shifted to other place, right? So it's not the AI enabled or even the agentic AI, okay? Then let's go to the other slide to see how this happens, right? So what is missing? Why are we still phase one? How to reach the phase two? Here it's to show you how it happens, how to reach the agentic AI. So we have the AI chat app, like ChatGPT, for example, right? That we have that already. Then the checkout surface owner is like the open AI embedded checkout. Is the one that enables the checkout being doing directly at the app, the AI app, right? Then the identity wallet is the tech stack that is behind that connects your ID of the chat app to your payment profile. Okay, in US where it's happening, it's via Stripe Link, for example. I have other providers, but this is the one that is occurring there. And then finally, you reach the PSP and acquiring behind the transaction and the merchant, right? So this is how the AI flow would happen until the agentic AI. And what is available here in Latin America? So we do have ChatGPT and chat apps, right? We don't have yet, and we miss the checkout surface owner. We need like Google or OpenAI to expand this capability beyond US so it can reach other regions, including LatAm. Also, we have an issue with the identity wallet because it's a very fragmented segment in Latin America. And for this to really happen, we need fully tokenization. And in LatAm, currently have 50% of the card tokenization, right, occurring. So it still needs this identity wallet to really move forward. And the PSP and acquiring, it's a good question. Do we think they are ready? I would say yes, especially the tier one. They are all Take-enabled, ready to operate this model. But we still miss these two big buckets. So just to summarize, we need what is preventing us to move to phase two. It's like the AI embedded checkout that is needed, the fragmented wallet, identity wallet, that can cause issues like 3DS requirement with friction towards the process, and the tokenization that it's not fully, it's around 50%, but it's uneven throughout the region, which makes it harder for the new model to really scale and roll out. Okay, but then let's pretend in the next slide, what about phase three, right? Let's do a hypothesis. Do we think that we are not yet on phase two, US is, but do we think that Latin America could enable the autonomous e-commerce and then what is really the agentic e-commerce faster than US? And we may say that we think there is a possibility, especially because of PIX infrastructure that is already built, the PIX automatic when the payment initiation from PIX because of this infrastructure. Just one point that is curious, this conversation about phase three is not even taking place in US. We're bringing this here as a hypothesis, so what is missed, so we really understand what is missing and where we are, okay? So what is needed for an agentic payment to happen, right? We have 4 things that we need. So we need the merchant's inventory to be exposed via AI. We need the tokenized agent ready for the payment, the credentials payment. The pre-authorized mandates and the programmable constraint, meaning like we need to be able to program the triggers for that transaction to be completed autonomously. And we need the payment initiation without any human confirmation, right? So this will be directly autonomous and fully automatic. This is what is needed. What do we have? And here talking about Brazil because of PIX, right? But what do we have here in Brazil? So we already have embedded commerce, right? Because you have in marketplaces, in financial institutions apps, in via banks or even fintechs. We have push payments via APIs, recurring payment protocols via Pix Automático, and open bank, which is already a reality here in Brazil, and payment initiation. So we already have the basis, the infrastructure behind to enable the autonomous payment and the recurring payment, right? But it's still, when we think this, the idea of this slide is like, when I first thought about that, we were discussing this, is like, it's really interesting because we have everything that is needed from the infrastructure point of view, right? It's still missing some points, but this is completely different from what we see being the market talking about agentic e-commerce, because the way they put the information out there. But here's just to show that it's interesting to see that some of the infrastructure capabilities are already here. Okay, so maybe this hypothesis can happen. And if this happens, what we need, what is needed? In the next slide, please, you're gonna see how the flow is designed. So currently, what we have in Brazil is like, if you want to do a Pix purchase, right? So you go to your fintech app, they will call an API for a Pix Automático, and then the Pix transaction will be completed, right? All done. So for this, what we will need to add is to add this wallet layer authentication, right? This is where the card tokenization sits in a card rail infrastructure, right? So taking this here, extrapolating to the Pix, this is where we will need. But guess what? We already have that, because when you use Pix, your fintech app, your bank app, already validate your ID via biometry. So you already have that. It's even simpler. But so what we need to do, it's like really a structure for one agent to call initiate payment with the other agent, with the merchant, for example, right? The programmable guardrails and the clear liability rules. When we do our autonomous automatically, if something goes wrong in case of any problem with the purchase, in each step, who is responsible for what? So this should be clear before this all happens, right? But the biggest question is, we have all here, you see the infrastructure, the way it could work, but do we think consumers, Latin Americans, want it? Is it something that the consumers want for their purchases to start and to complete automatically without any support? Or is this a problem? Really, there is a demand for that? And if so, in which use cases, right? Or we are so involved in this AI era that we need to create a solution for a problem that we don't know that it really exists, right? This is the main questions about the agentic AI for Latin America. And I want to call Lindsay here so she can go to the PCMI support and the strategic part.
Thanks, Marina. This question is fascinating, as you all know. I love that trajectory of where are we actually in agentic AI, and is this futuristic? Is this speculative? Is this realistic for the region? The biggest question I have for Latin America, and I think everyone needs to be really asking, is there's this industry assumption that agentic commerce will be built around card rails. And that is very likely to occur in the US, where Visa and MasterCard have already, since last year, are building agent-ready credentials, AI agent-ready credentials. However, we shouldn't take that assumption for granted. And in other parts of the world, could agentic move faster around other rails and around other identity authorities, such as wallet identity authorities plus an account alias, such as the case of Pix, which Marina just described? So that's the question that we want you to be thinking about. And of course, that is going to determine your actions, whether you're trying to own UX identity data. Are you trying to enable the integrations behind agentic commerce? Are you trying to optimize for economics or your ultimate competitive position? This will help you figure out what is my next move. And if we show, PCMI, we want to support you here. Unlike the Breve example, where there's already a clear roadmap of how this might play out, it's pretty much an unknown. And who can answer this question is the one who creates it, right? The one who takes action, takes risk, and builds the infrastructure needed for agentic. So PCMI is here to help you build intelligently, monitor and defend, or actually reflect consumer demand, what Marina was just mentioning. What do consumers actually want and which use cases are likely to scale based on how consumer behavior is already evolving? Okay. Fabulous. Thank you very much. Let's continue on. We are going to dive into the topic of cross-border, and with that, I will invite Mika to take us through the content.
Thank you, Lindsay, and thank you all guys for being there. It's a pleasure. And now we are going to talk about what's going on in terms of cross-border payments in the region. So if we start with the first slide. In the world of cross-border payments, and particularly intra-regional flows in Latin America, the strategic question today is quite simple. Which rail is actually going to scale faster this particular year and the next year? So some of you may have joined our webinar about a month ago, where we actually explore this same debate. And when we strip it back, there are three competing pathways emerging in the region. The first one is wallet interoperability. The idea here is that large domestic wallets expand beyond their home markets through bilateral, multilateral partnerships. The second one is interlinking domestic RTP systems. We've seen this model take shape in Southeast Asia, where national real-time systems are connected to enable direct account-to-account cross-border transfers. And the third pathway is stablecoin-based rails. So here, stablecoins are already facilitating somehow certain cross-border use cases. Particularly, the most well-known are remittances on treasury flows. So here, as we said, the real question is not whether cross-border innovation will happen, because this is happening like in the three different pathways. But the main question is which infrastructure layer will anchor it, right? So if we go to the next slide, we are going to see that if we already have this context, right? With that context in mind, we can now shift from observation to describe what's happening to evaluation. So over the past several years, we conducted dozens of studies across the cross-border payment ecosystem in Latin America. And across these projects, one thing became really clear, that not every rail that launches is structurally positioned to scale. So basically what we did is develop a practical framework, a way to consistently assess whether a given payment rail or infrastructure has the conditions required for meaningful growth. Here we have 5 pillars that repeatedly determine success. The first one is technical capability. Is it the infrastructure actually capable of supporting cross-border payments at scale? The second one is regulatory support. And here we have to answer the question if our governments and regulators align on this. The third one is bank participation. So here the question would be, do banks actively support the rail? If we have to talk about the last two pillars, we have to talk about use case development. And here the question would be, has the infrastructure moved beyond connectivity into actual products? And the last one would be consumer adoption. And here what we have is that, okay, is the adoption already there, or does it need to be created? So this framework is not about predicting a single winner. Instead, we are providing here a very structured and disciplined way to assess the rails that are positioned to move faster, which are structurally constrained, and where investment or experimentation makes sense today against later, right? So going to the next slide, we ask our network a simple question, a very simple question, that is, which pathway is most likely to scale fastest for cross-border payments in Latin America? And 50% of our network predicted that wallet interoperability would move fastest. The particularity here is that wallets already have three critical ingredients. First thing is the large existing user bases. Second is growing regulatory comfort in many markets, in many countries. And the third one is commercial incentives to expand regionally. And here what we have and what is important is that for wallet interoperability scheme is that rather than building new infrastructure from scratch, wallets can, from smart bilateral or multilateral partnerships, extend cross-border functionality. They don't need to recreate adoption. They can build on behavior that already exists. The next slide, we are moving forward to these recent developments, but we already identified what appears to be a fourth model emerging in the region. At first glance, it looks like wallet interoperability, right? But structurally, it's something different. We are calling it bank disguised wallets. So we are taking the recent Japan-Neki corridor, this example that was very recently announced, and if we see at the surface, it appears to be wallet to wallet, right? But Chape is owned by BCP and Neki by Bancolombia. So there's not visible indication that this corridor is powered by another rail like Visa Direct, Mastercard Move, or stablecoin rails, right? So the more realistic explanation is very straightforward. This is likely a bilateral correspondent banking arrangement somehow operating behind a wallet interface. So in other words, traditional banking rails are modernized at the front end. So settlement most likely occurs by US dollar corresponding bridge, which actually remains the dominant clearing structure for these intra-regional flows. So why is this is important? Because this changes how we interpret, how we create this interpretation of wallet-to-wallet announcements. So not all wallet corridors represent new infrastructure. So some are very simple correspondent banking rebranded through a digital interface. So for banks, this is strategically powerful because they retain control over effects, liquidity, compliance, settlement economics, and at the same time, they are delivering a seamless wallet experience to the consumer. So here the takeaway is what looks like innovation at the interface layer may actually be traditional banking rails underneath. So the distinction matters when we think about scalability, economics, and long-term competitive positioning. And the key question, if we go to the next slide, is whether this Chape-Neki corridor is an isolated case or a replicable model. And this matters because in cross-border payments, whoever controls orchestration and liquidity control the economics, right? So every transaction generates values, and because we are talking here about FX spreads, settlement fees, network margins, and the player operating the underlying rail captures the value. So if banks begin operating behind high adoption wallet brands through these bilateral corresponding agreements, this actually could materially reshape the cross-border landscape in Latin America. So across the region, I mean, we have several tier one banks on wallets, such as Match in Chile, DaviPlata in Colombia, Shopee in Panama, that could support similar bilateral corridors, right? So this wouldn't be unprecedented. We have in Southeast Asia cross-border payments that already operate through a dense network of bilateral and multilateral banking agreements. What's ultimately at stake is this value pool, right? If these aggregators power the rail, they capture the margin. If card networks power it, they will capture the margin. And if stable coins power it, the crypto infrastructure will capture the margin there definitely. So, but at the same time, if corresponding banking sits behind the wallet interface, banks will retain this control of FX, liquidity, and settlement economics. So this is not just about innovation. It's about who owns the economics of cross-border payments going forward. So if we go to this next slide, Lindsay, I go back to you so you can close this section.
Thanks, Mika. If you caught our webinar on cross-border payments about a month ago, this will resonate. As interregional and cross-border flows in general grow and become more fragmented, the question is, now you're going from a regional scope to a truly global scope, and you have what we call a complete blue ocean of opportunity. So the question is, which role in the cross-border value chain should we deliberately choose? Which should we deprioritize? And where should we build? It's really about carving out a specific niche in the market for your brand and for your capabilities. That's the major question that I want companies to be thinking about. And if you think about PCMI and how our work supports you, finding the best brand then product fit in this blue ocean, designing new revenue streams, getting your foot in the door, right, in this growing segment and designing new revenue streams in an existing financial ecosystem. Or, if you're an incumbent, transforming a defensive positioning into actual proactive expansion via partnerships, JV, or acquisition. So it all depends on who you are, where you are, and what you want to do. But ultimately, getting really clear about how you're going to compete in this market that is in the trillions of dollars and growing is something that you really need clarity on moving forward. Okay, fantastic. Let's go on to trend number 4, and I will have Valentina come back to tell us about the great acquiring unbundling in Latin America.
Thank you, Lindsay. Next slide, please, Abel, too. So let's just start by grounding this trend in Latin America, structural reality. The region still has a significant acceptance deficit. So if you're seeing the numbers look pretty solid, like we have 20 million POS terminals, 20 million formal merchant, that give us around 1.45 terminals per merchant. So that implies 69% POS penetration among formal merchants. But Latin America has very large informal economy. So when we expand the land to include micro merchants and informal sellers, we estimate around 55 million total selling entities. And against the base, POS penetration drops to 25% overall. So that gap represents one of the largest structural growth opportunities in Latin America payments. And some in the next slide, we will see some trends that is taking this opportunity. So we are seeing here the shift from hardware land software. It's a hardware land payments to software land acceptance. That is called soft POS. Soft POS essentially turns NFC-enabled Android smartphone into a payment terminal. How this works? The merchant download an app from the acquirer or PSP provider. Once the merchant is enabled, the phone can accept contactless payments directly without a dedicated hardware required. So in Latin America, this model is really relevant because Android penetration is higher than iOS, and iOS has other model. And just to understand what major acquirers are doing, they're doing this and they are like enable soft POS, so we can say that this trend is rolling out in the region. Why this matter? This matter because the margin cost here in soft POS model drops dramatically when we leave behind the whole hardware. So for our region, with only 25% overall penetration, reducing the costs and the onboarding friction is really critical. I think soft POS is one of the most practical levers that we can find in the region to close that acceptance gap. And how this is growing, and we can go to the next slide. I will, thank you. Soft POS, you can see here, soft POS adoption is growing across the region. Some estimates could vary. Some markets are reporting 70% annual growth, others are reporting over 100 growth, but we can say that today we estimate under 1 million soft POS the deployments across the Latin American market. Why we think this effective? This is effective for micro merchants like taxis, last mile operators, professional service, among those segments where traditional POS hardware is either too expensive or impractical. So seeing the graphic, if we assume 25% annual growth for soft POS versus 5 to 10 for traditional terminals, we can say that penetration, substance penetration improved meaningful by 2030. But I want to make this really clear. Even under those assumptions, one of the third merchants in the region may still lack of digital acceptance. So the next question is, what else need to be done to escalate? And if you go to the next slide, the answer, you can say the answer is embedded payments. For us, one of the most powerful long-term levers to close this gap is embedded payments within vertical SaaS platforms. If we see this trend globally, embedded payments have become the major distribution challenge for acquiring. In Latin America, however, this trend is in early stages, but we can see like three verticals really interesting. The first one, accounting, where you can find financial operation, core small business with payments, restaurants. You can find POS, back office, and payments, Bumble, and wellness, beauty, and health, or vertical, when you can find appointment management, billing, and payments integrated. Embedded payments won't close the acceptance gap, but as SMEs digitalization accelerates, vertical SaaS platforms could become one of the most powerful long-term evangelists of digital payments. So, for wrapping up, I will pass the floor to Lindsay.
Thanks, Bale. So the question here is, first of all, am I aligned in the future-driven trend of software-led acquiring? Is this even on my radar, and am I remotely aligned with this trend? And if I am, what role should I be playing? This is a very emergent role in the trend in the region, very incipient. So there's a lot of open possibility, but depending on if you're trying to own merchant relationships, enable technology, or optimize cost and software hardware mix is going to depend on what role you are playing in this software-led shift. So, thinking about defining your long-term ecosystem strategy. Matching your actions with ecosystem maturity, which markets are ready for these types of software-driven initiatives or not. And then optimizing sales and marketing ROI. A lot of this is pure sales. I'm selling to acquirers, I'm selling to banks, I'm selling to merchants. How can I make my sales and marketing investment really give me an attractive ROI as the region moves in this trend? All right. Wonderful. We are almost to the end of our session here, and we have a final trend to share with you all, and that is a B2B payment modernization, which is a fascinating topic. And I want to have Marina come back and tell us about this trend.
Okay, thank you, Lindsay. So let's explore this B2B modernization, right? And when I talk about B2B modernization, we normally start talking about acceptance, right? Because that's all everything starts. It's how the merchants accept the money, and then the full chain. So especially here, Latin America, a very multi-rail, multi-fragmented, all this scenario that we already mentioned. We came to a Reddit post that we saw it and we thought it was very funny. It was like someone was talking about Latin America payments, and we were like, this person doesn't know anything about the region. But then we start reading and look at the story. It makes totally sense. So it's sort of like you are a merchant, right? And you want to expand global. And then you say, okay, so I can use a global player. Let's go with Stripe. Okay, let's go with this stripe. Then, oh, it's only available in Mexico and Brazil. Okay, so I can't go only with this stripe. What about the other Latin American markets? Now we can use PayPal, another global provider, right? Yeah, but it's cost prohibitive. It's very expensive and not really local. Okay, so let's go to the local solutions. What about Pix in Brazil, OXXO in Mexico? Let's try to find this, but yet doesn't scale across the region. I just can go to these specific markets. Okay, so what about the local banks? Let's start the local banks. Great, they are all in all the markets. They have bank transfers. People like bank transfers, but again, it's very, very fragmented. Doesn't solve the problem. Okay, so I heard there is some merchant of records model players like eBanks and the local. Yeah, they are throughout the region, but they are really expensive and you lose control because they are the ones doing all the consolidation and sending you the funds. So you lose control. So yeah, then at the end, when we stopped reading this post, we were like, oh, the story makes sense. It's correct, right? And on top of all this, we still have a rate of 30 to 40% decline in transactions in Latin America, right? So it's kind of very, very complex. And although via the explanation, then we understood he doesn't have all the explanation about the region because of the comic question he ended the post is like, why isn't there a single payment solution in Latin America? And I was like, oh, is it comic or is it naive? Because for us, we that work in the region, we know it's almost impossible. And why? Let's go to the other slide just to show Latin America is a massive region, right? You have 38 countries plus 30 currencies, a lot of payment models, a rise of stable coins, cryptocurrency. Merchants normally have to do more than 5 payment integration to serve the customers. So it's very complex. So this kind of answers, snapshot that question. But even though the post was really interesting because of this story. So because of this situation, this scenario, we saw a figure there was almost always there, but it's like rising now, which is the payment orchestrator, right? Because of the need of providing one single API integration for these merchants and to simplify the flows, right? So the orchestrator, basically what they do is like they centralize payment methods, gateways, and PSPs via one single API, one platform. It's easier for the merchants that have to navigate this complex landscape, right? But on top of that, it's not only simplifying the transaction. They offer a lot of value-added service to even simplify more, right? So smart transaction routing, fraud detection, automated reconciliation, the tokenization, and one that is key for this environment of multiple payment methods is the ability to integrate new payment methods and onboarding them and go to the market very fast, right? So this orchestrated market are indicating to have a 2.5 billion in revenue, right? And it's growing 25% year over year. The question is, are they the new super aggregators? It's more than that because they on top of simplifying, they have all this additional value service that we mentioned. So it's not the super aggregator, it's really the super orchestrator. Let's say they're orchestrating this complex environment and making it easier for the merchants to navigate Latin America, right? Then on the next slide, very briefly, because we're on top of time, I just want to pass through the B2B payment value chain. And you have a part that is getting solved by the orchestrators and a part that is still to be solved, right? So it starts with the acceptance. You accept the payment, right? You have to process it, authenticate and process it. Then the settlement, and then reconciliation. The data should be there so you can really acknowledge you have the payment. This part, just one back, Abel, very quickly. The first part, which is the acceptance, it's already addressed by the payment orchestrator. But when you get the revenue and have to convert that into cash, so you can use either to make payments, to treasure in cash, to have some yield on your money, and even to get some working capital finance, this portion is still not tackled yet by a unique provider. And that's what, in the next slide, what we started showing very briefly. So this is all that still needs to be solved, and a huge opportunity for the market, right? So we have tons of opportunities in the cash conversion, We need support with payment disbursement, especially if it's cross-border. We have slow and inflexible payment rails. We need fast payment, fast data. The treasury management is like today it's like an era of real-time treasury. CFOs need data as soon as possible, right? And the working capital finance is something that it's not that developed in the region, especially because of the size of the suppliers and a lot of non-formal suppliers, right? So to end here, about if you could just put here what needs to be solved, but basically what we are saying is like we really need digitization, we need integration, reconciliation, automated tools, right, and also supply chain financials. But in order to navigate this scenario, all this is still needed and is still like this green ocean for providers to really try to consolidate as the orchestrators are trying to do and are really executing it well. On the acceptance side, correct? So, Lindsay, I'll turn it back to you to complete.
Fantastic. And someone asked a great question here that I want to address. Isn't working with orchestrators also loss of control using their rules and connections? And absolutely yes. And really, each of those different levels that we suggested they all have trade-offs. None of them, it's not a criticism of anyone in particular. They all have benefits, they all have advantages, they all have disadvantages. They all come with trade-offs that every merchant and every player has to negotiate. I think the point is I love what you said, Marina. Is it just that writer was kind of clueless or naive? But to be honest, when approaching Latin America, the level of complexity is overwhelming for global merchants, especially if you're coming from a US or European environment. And so managing those trade-offs is the job for the payment enablers in the region, and actually educating those clients on the complexity of the region and why that complexity exists and what these solutions are and what the trade-offs that they have to make decisions about is part of our job in the industry, right? So absolutely love that point that someone brought up. And just to close us out on this trend, Marina, what you mentioned at the end, right? This is still very, B2B digitization is only at its very beginning stages in Latin America, really globally, but especially in Latin America. So all of these PSPs, merchant of record guys, all these solutions, now the payment orchestrators have tried to remove friction and embed solutions on the acceptance side. And what is still in even earlier stages is everything on the actual B2B payment side, from cash management, treasury solutions, digital rails, AI and data-rich solutions. This is where there's absolutely wide open opportunity. So the question we need to be asking is, which portion of that B2B payment value chain offers the fastest path to digitization? And where do I have the right to lead? Similar to the cross-border payment question, is what type of customer, what industry, what solution is actually going to be the right mix for me to succeed in this area, which has absolutely massive potential upside. Okay, so this is directional support that we can provide in helping you make these decisions. All right, so we are wrapping up here. I just want to take a moment to put all of this in a final context for you. Thank you guys for hanging in there. We're just about 2 minutes away from wrapping up. If we look at these 5 trends together in Latin America, we kind of have this scale from zero, still speculative, to 3, completely mature. And this is how we might map Latin America. This is, a matter of opinion. Some others might have a different perspective, but from where we sit at PCMI, this is how we see these 3 different trends playing out. And so the level of maturity also impacts your decision making and the set of solutions you need to move ahead confidently. And if you join us tomorrow for the US and then again on March 10th for Asia Pacific, we'll be revisiting these same trends and looking at how they're shaping out in each of these regions. But to give you a preview, if we go ahead, we can take a look at what the maturity level looks like of these trends across the different regions. So we can see Asia Pacific might be considered the most evolved in many of these trends. US a little also more in that intermediate state. Very interesting context, as many of you know. But Latin America, really multi-rail is where Latin America really seems to be more advanced in comparison to other regions. So hopefully this gives you a nice comparative view, especially if you sit in a global role of how these things are playing out across the region. Okay, and just to drive things home for you all, I know this was a lot of content and a lot for you to think about, but if you were going to have one takeaway slide, if we go to the next one, I'd love for you all even to take a screenshot of this. These are the top 5 questions that we think you should be considering in 2026 and even as we go into 2027 that are impacting the region, that will determine winners and losers, determine market share growth via versus market share loss, and where there are big opportunities for success and for new business models, for new vertical expansion, etc. So this is a summary of where we see touching multi-rail, touching AI, touching cross-border, touching acceptance and acquiring, and finally touching B2B. Okay, so that is where we will leave you. I believe we're over time. We had a couple of questions that we will reach out to folks individually just due to the time. Really appreciate all of you guys tuning in. Here are our lovely panelists today and a link to our website. And I just want to end with a final note, as our mission at PCMI is to be more committed to your success than any other consultancy that you might work with. If we go to the next slide, we'll show that mission for you. Just want you to know that these solutions that we've developed between research, insights, and decision frameworks, we want to make you personally advance in your career, make you look good in front of your bosses, make you advance your company's agenda, and achieve your goals faster and have greater impact. We know that we're all here to make an impact, and we're here to partner with you to do that. So thank you very much for tuning in. All of these materials will be sent to you, including the recording and the slides, and we would love to meet with you one-on-one if you have questions or reactions, so we'll be reaching out for that as well. Thank you, everyone. Have a great rest of your day. Hope to see you tomorrow for the U.S. session. Thank you.